Renaissance Basket Options Tax Scheme, 2000 to 2015. Jim Simons' hedge fund, Renaissance Technologies, ran one of the biggest tax controversies in U.S. history. From 2000 to 2015, the firm used a trick called basket options. Here's how it worked. Renaissance made thousands of quick, short-term trades every single day. Normally, those profits would be taxed as regular income at the highest rate. But by partnering with big banks, they bundled these trades into options contracts and claimed they were long-term investments. This accounting trick let them pay the much lower capital gains tax rate. The U.S. Senate later calculated that Renaissance avoided more than $6 billion in taxes. In 2014 and 2015, the scheme became public during a Senate investigation. Finally, in 2021, Renaissance was forced to settle with the IRS, paying billions in back taxes, penalties, and interest. It was one of the largest settlements in American history. For Jim Simons and his team, it was a costly hit, but far from crippling. The Medallion Fund remained one of the most profitable funds in the world. Medallion Fund versus Institutional Fund Returns Discrepancy, 2008 to 2009. During the 2008 financial crisis, Renaissance Technologies faced backlash for how it treated insiders versus outsiders. The firm's secretive Medallion Fund, which only employees could invest in, made an incredible 80% return after fees in 2008, while markets were collapsing. But at the same time, the Renaissance Institutional Equities Fund, open to outside investors, lost 16%. The gap was massive, and investors accused Renaissance of favoring its insiders while leaving outsiders to take the hit. Critics said the firm's best strategies were kept locked inside Medallion, while weaker ones were pushed onto public funds. This controversy raised big questions about transparency, fairness, and conflicts of interest at Jim Simons' firm. Lawsuit over employee departures and alleged trade secrets theft, 1990s to 2000s. In the late 1990s and early 2000s, Renaissance Technologies entered a major legal fight with two former employees, Alexander Wolfbane and Anatoly Belopolsky, who left to join Millennium Management. Renaissance accused them of stealing proprietary trading models and using its confidential algorithms to generate hundreds of millions at Millennium. The lawsuit dragged on for years, showing how far Jim Simons would go to defend Renaissance's black box strategies. The ex-employees argued that Renaissance's contracts were overly restrictive and unfair, especially since non-compete agreements were not enforceable in New York at the time. This meant talent could leave freely, taking critical knowledge with them. The case exposed how fragile hedge funds are when employees with deep algorithmic knowledge move to rivals. It also revealed Renaissance's paranoia about leaks, since its entire success depended on mathematical secrecy. Offshore megatrusts and secrecy, 1970s to 2010s. Jim Simons also faced scrutiny over his use of offshore trusts to manage billions. One of the most notable was the Lord Jim Trust in Bermuda, established as early as 1974. Through complex shell companies and offshore structures, Simons moved huge amounts of wealth into these trusts. The goal, according to critics, was to shield assets from United States taxes and regulators, while keeping financial dealings hidden from public view. The details came to light decades later, between 2017 and 2022, after leaks like the Paradise Papers exposed how billionaires quietly stored fortunes overseas. Even though Simons claimed that all taxes were paid properly, the secrecy raised questions about transparency and fairness. For many, it showed a double standard. While ordinary Americans are fully exposed to the tax system, the ultra-rich can rely on offshore secrecy networks to protect their wealth. This fueled debates about whether Simons was simply being financially smart or deliberately exploiting global loopholes. Firing from the Institute for Defense Analyses, Vietnam War era. Before becoming a hedge fund legend, Jim Simons worked as a top mathematician at the Institute for Defense Analyses, a Cold War think tank that did secret work for the United States government. During the Vietnam War in the late 1960s, Simons grew increasingly vocal against America's military actions. He openly criticized the war and even challenged the Institute's support for defense-related projects. This outspokenness clashed with the leadership. Despite his brilliance, Simons was fired for refusing to stay silent and toe the line. The incident revealed an early side of Simons, a man willing to risk his career by taking a controversial public stand. It also marked a turning point. His dismissal pushed him away from government work and eventually toward finance and private ventures, where he built Renaissance Technologies. Ironically, what seemed like a career setback became the event that set him on the path to becoming a billionaire. Major early trading losses and investor fallout, 1989. In 1989, Renaissance Technologies nearly collapsed after a series of disastrous trades. The firm's early automated trading systems, still experimental at the time, produced heavy losses, especially in foreign currency markets. One major blow came from risky bets in the Canadian dollar, which went so badly that some investors suspected fraud. A warning from a contact at the Chicago Board of Trade revealed how close Renaissance was to being wiped out. Angry investors demanded answers, and many questioned whether Simons' new quantitative trading approach was even viable. Renaissance's credibility hung by a thread. These failures exposed the fragility of early algorithmic strategies and showed that even Simons's groundbreaking math was not foolproof. But instead of quitting, he doubled down, refining the models that would later make Renaissance legendary. This near-death moment became one of the darkest chapters in the firm's history, proving that the road to billions began with almost losing everything. Repeated questions about fund transparency and exclusivity. For decades, Renaissance Technologies has faced criticism for its extreme secrecy. At the center of this is the legendary Medallion Fund, the most profitable hedge fund in history, but one that is completely closed to outsiders. Since the 1990s, only Renaissance employees and insiders have been allowed to invest in Medallion. Meanwhile, outside investors were pushed into less profitable funds like RIF and RIF, which consistently delivered weaker returns. This exclusivity fueled anger and suspicion. Regulators, financial journalists, and rival investors accused Renaissance of hiding key information about its strategies, fees, and operations. Even today, little is known about how Medallion consistently outperforms the market. The secrecy not only drew scrutiny from the government, but also created a sense of unfairness in the financial world, where insiders reaped extraordinary rewards, while outsiders were left with underperforming scraps. To many, Renaissance became the symbol of Wall Street's black box culture, where wealth is built behind closed doors, with little accountability to the public. Family tragedies and media sensationalism. Behind Jim Simons's financial empire lies deep personal tragedy. In 1996, his son Paul died in a car accident at just 34 years old. Then in 2003, another son, Nicholas, drowned in a boating accident while in his early 20s. These devastating losses became frequent subjects of media coverage. While tragedies like this were not connected to Simons's business decisions, the press often sensationalized the stories, speculating on how they affected his personality, leadership, and even his drive to succeed. Some reports painted Simons as a man who buried himself in work to cope with grief, while others criticized the financial press for prying into private pain. The repeated focus on his family tragedies blurred the line between legitimate reporting and exploitation, turning personal suffering into headlines. For Simons, it added another layer of unwanted public scrutiny on top of his already controversial professional life. Excessive hedge fund fees and industry impact. Renaissance Technologies is also notorious for charging some of the highest fees in hedge fund history. The Medallion Fund has been reported to take 5% of assets under management, plus 44% of all profits, far higher than the traditional 2 and 20 model used by most hedge funds. These extreme fees were only possible because Medallion consistently delivered enormous returns. But critics argued the structure was exploitative, allowing Renaissance insiders to extract a massive share of gains while giving little access to outsiders. The fee model also set a dangerous precedent across Wall Street. Other funds attempted to justify higher charges by pointing to Medallion, fueling a culture of profit-first management in the hedge fund industry. Regulators and industry experts questioned whether such high fees created an anti-client environment where only insiders truly benefited. For many, this became another symbol of how Renaissance operated on its own terms, prioritizing secrecy, exclusivity, and internal wealth above all else. Internal power struggles. The Mercer controversy, 2016. In 2016, Renaissance Technologies faced one of its biggest internal crises, centered around Robert Mercer, Chief Executive Officer of the firm. Mercer was a brilliant computer scientist and a key figure in building Renaissance's success. But outside the firm, he became heavily involved in political funding, backing Donald Trump's presidential campaign and far-right causes. This sparked a storm inside Renaissance. Many employees felt Mercer's activism was tarnishing the firm's reputation and creating a hostile work environment. Reports suggested that even investors and the public began associating Renaissance with divisive politics. Jim Simons, who was politically the opposite of Mercer, was forced to step in. To protect the firm's image and stability, Mercer eventually stepped down as Chief Executive Officer in late 2017, though he remained an investor. The controversy revealed the fragile balance of power at Renaissance. Even one senior figure's personal choices could threaten the firm's secrecy, unity, and public standing.